Good evening, students. Welcome to the session on audit. In the morning, we had this detailed discussion around fiscal laws, wherein we were discussing about tax audit specifically. And we were midway in terms of our discussion in relation to tax audit. There are certain things about the tax audit that we discussed. I'll just quickly recap all of those discussions. One was around the applicability of the tax audit and the context which we understood as to why tax audit is really relevant. Then we understood about the applicability which comes from the requirements of Income Tax Act only, wherein certain criteria are prescribed, turnover or say turnover of the business or in respect of professional income, what is the criteria and the threshold. Then we talked about auditor's report in case of a tax audit, which can be of two types, 3CA and 3CB. So it's a specified form, it's a specified format which has to be specifically used, and this form is also required to be filed online. So this report is also filed online, unlike the other audit reports which you see are signed in the hard copy by the auditors. So this is a report which goes online, on which digital sign is placed by the auditor. Around these two reports, we discussed that Form 3CA will be applicable when the financial statements of that entity or that person are required to be audited by any other law or as per any other law. But in case those are not required to be audited at all under any other law, means any law other than the Income Tax Act, then in such a case, Form 3CB will become applicable, and therein tax auditor will have this added responsibility to audit the financial statements of that entity, because in such a case, the base happens to be the financial statements, which will then be required to be audited by the tax auditor, and in which case he will also be giving his opinion on the financial statements. Yeah. Then we moved on to discussion related to form number 3CD, which is required to be prepared by the management and which contains multiple clauses. And for all of those clauses, one prerequisite which we discussed was about the understanding of income tax, because only when the management will understand income tax, they will be able to fill that form 3CD correctly. And the auditor also needs to have a thorough knowledge of income tax, because only when he will understand income tax, or at least those provisions of income tax which are required in relation to form 3CD, only then he will be able to audit form 3CD properly. Correct? Yeah. We were discussing about various clauses, so I'll not get into those clauses again. So what we can now do is we can just quickly look at some of the questions on the basis of some of the clauses that we covered in the morning. Okay. So one question that we discussed in the morning was about ICDS. And now we can move on to some other requirements. Let me just quickly flip through as to what all clauses we covered in the morning. So let's suppose there's an entity. Let's suppose there's an entity, say it's MNO Limited. This entity is subject to tax audit. This is subject to tax audit, and tax audit has become applicable on this entity for the first time. Say 2019-20 is the first year in which tax audit has become applicable to this entity. This is the first time that the tax audit has become applicable to. Okay. Financial statements of this entity are already audited. Financial statements are already audited by, say, P and Company. So P and Company happens to be their statutory auditors who have audited their financial statements. And in respect of the financial statements, some of the policies around inventory valuation, etc., have been mentioned. The policies around inventory valuation has been given. Secondly, the policies covering the accounting, means other accounting policies, have also been detailed out in the financial statements in relation to accounting only. Okay. But nowhere in the financial statements there is a discussion about the books of accounts, means as to which all items are there in the books of accounts, or which all items form the books of accounts. Now in this case, another firm of chartered accountants has been appointed as the tax auditor. Let's suppose R&D company has been appointed as tax auditor. Yeah. Now R&D company has certain observations in relation to tax audit of M&A Limited. So let's understand the observations or their queries or maybe their requirements. One, they would want to go through or in a way examine complete books of accounts. So they would want to examine complete books of accounts, because I understand there's a clause. Let me just get to that clause quickly. There's a clause 11B. Yeah. There's a clause 11B which requires management to list down books of accounts which they have maintained and the address at which books of accounts are kept. Now the auditor is of the view that because he will be required to audit, audit this form 3CD which contains the list of all of these books of accounts. So till the time he will not examine the complete books of accounts, he will not be able to comment on this, whether all the books of accounts are captured or not, whether those are correct or not. Okay, so that is his view. Understood the query? Yeah. Secondly, he is also saying that in respect of the policies, around which ICDS requires disclosure. So he's saying policies around which ICDS requires disclosures. Let me just see which ICDS is that. So that is about ICDS 1. So ICDS 1 requires disclosures around the accounting policies. Okay. So he's of the view that policies around which ICDS 1 requires disclosures are again all the accounting policies of the company. Because effectively all the accounting policies of the company are captured by ICDS 1. And if the auditor has to comment on this, then in a way he is required to audit those accounting policies or to confirm whether the accounting policies are appropriate or not, for which again he will require to audit the books of accounts. So that's his second observation or the thought which he has shared with the management of M&O Limited. Yeah. So what the management of M&O Limited could understand on the basis of the requirements of R&D company was that in a way R&D company are looking at audit of books of accounts. So they are in a way looking at audit of books of accounts. It may not be a complete audit, but significantly they want to cover the audit of books of accounts of the company. Okay, yeah. So that's the requirement which management could assess on the basis of requirements and the discussions with R&D company. Okay, yeah. Now in this case, this matter is stuck because MNO believes that they are already audited by P&D company. They are already audited by P&D company, but R&D company is looking at the situation wherein they will be required to give their opinion, and that opinion is not about true and fair view, that is about true and correct view, which is an extended form of true and fair view. Okay, so it's more extensive. That's why R&D company would require all of these procedures to be performed as they have been seen. All right, yeah. So now I'll have to clear some of this part. Okay. Now in the given situation, what do you think can be the way on the part of the auditor as well as the management to resolve this matter? So we can look at some of the options. So let's see what can be the options available over here. A, I think the best way to resolve any matter is to give the representation. Correct? For any audit, the best way is to give the representation. So management should give representation letter in respect of these matters or in respect of these requirements to the tax auditor, and that should be good enough to take care of these requirements. Number two could be a situation wherein the management can request the statutory auditor. Wherein the management can request the statutory auditor to share his working papers with the tax auditor, so that instead of tax auditor getting into the complete details or complete audit can limit his work, he can use the work papers of another auditor. So management should arrange working papers of P&D company, basis which R&D company should be able to review and conclude. That's the second way. Third is the requirements of R&D company are valid, but the extent of testing which he has been looking at are not appropriate. Requirements are valid, but extent of testing planned by the tax auditor is or should not be too extensive to cover complete audit of books of accounts. Okay, so that means he should cut down. So what's the point? He should cut down in terms of its audit procedures. He should not really get into this complete audit of books of accounts. But there is no doubt that his requirements are valid. He needs to review these two clauses. So that's why his requirements are fine, but the extent of testing which he has planned is sort of leading to a duplication of the audit procedures or a duplication of audit. That's why it may not be considered to be appropriate. Fourth option. So I think I can clear this part for the fourth option. Fourth option is, in case R&D company gets into such procedures, and to such an extent, then it will be required to issue Form 3CB. Okay. So we are saying in case he gets into such an extent in terms of its audit procedures, then he will be required to issue Form 3CB instead of Form 3CA, which is currently applicable to R&D company. Why? Because statutory auditor has already completed the audit of the financial statements of this company. Okay, yeah. So these are the facts. I'm hoping that you have understood the facts, and I'm hoping that you have also understood the options. And I'm just hoping that you would have also tried to get to the solution in all of these situations as to which one you will think is the best option out of these 4 options that are available to us. All right, yeah. So do we get on to the option? So let's understand and analyze each of these options. Let's evaluate the first option. And on the basis of our evaluation, we'll have to just see which one out of these can be considered to be the best option. First is, management should give representation letter, and that should be considered as good enough. So this was not a completed sentence, and that should be considered as good enough by the tax auditor in respect of the requirements he has raised. Now, on the management representation, if you remember, there is an auditing standard. And what does that auditing standard says? That auditing standard says that by taking the representation letter, auditor will not be in a position to say that he has got sufficient appropriate audit evidence. Representation letter is definitely an audit evidence, but it's not so conclusive, and it's not the substitute for the auditor to perform his audit procedures in respect of various requirements. Yeah, I received the response in between from Ambika. I'm just hoping that many of you must have also thought it's an easy one. If you have understood all the requirements that we have discussed so far, you must be knowing the answer. So first option doesn't seem to be correct. Let's move on to the second option. Management should arrange working papers of P&L company. Now that can also be one of the ways to resolve this problem, or to cut down the time of the audit. But unfortunately, this is not legally permissible. This is not legally permissible. Even if an auditor is looking at the working papers of another auditor, there is a problem around the confidentiality in terms of the working papers of the auditor. So these working papers of the statutory auditor are his property. These are not allowed to be shared by the auditor to another auditor, even if the management is requesting. So that option is completely invalid. So this is not possible. This option also goes away. Correct? Yeah. Then we can move on to option number D. Why? Because Ambika has just answered option number C. So I'll evaluate all other options and then I'll go to option number C. Option number D. In case R&D company gets into such procedures, so we are saying in case they will re-audit the books of accounts. That is what he is looking at. In case he will re-audit or he will significantly cover the audit of books of accounts, then he will be required to issue form number 3C. But if you remember in the morning when we discussed about the applicability of form number 3CB, did we read any such provision? Did we have any such option through which form 3CB can be issued by the auditor? No, we didn't read any such option. And in this case, provision is very clear. Provision says that R&D company should issue form number 3CA. Why? Because financial statements are already audited. So clearly this is not possible. If this is not possible, then this option is also out of the picture. Let's now move on to this option and let's understand whether this option is also correct or this is also incorrect. This option starts with the statement that the requirements of the auditor are valid. Now, when we make this statement that his requirements are valid, we are also cutting down his extent of testing, because it says, but the extent of testing he has required the management to assist him on or provide the information for is something which is not acceptable. He has understood the requirements well in terms of performing his audit procedures on a couple of clauses, which basically talk about the accounting policies or the books of accounts. But these clauses nowhere require or would nowhere require the auditor to perform the audit procedures, which would become a duplication of the statutory audit. No. So that's why extent of testing planned by the tax auditor should not be, sorry, it should be, we have written should be, we're saying requirements are valid, but the extent of testing planned by the auditor should not be so extensive. Should not be so extensive so as to cover complete audit of books of accounts. Yeah. So it cannot be so extensive. It has to be limited. It has to be limited in terms of drawing the reference to the financial statement. So what can be the procedures? He can look at the audited financial statements. He can go through the accounting policies. He can evaluate the requirements of ICDS1. He can also compare the accounting policies. He can also check around the accounting policies whether the accounting policies as per his assessment are giving a true and fair view of the financial statements or not. And in case he has any observations around it, any of the adjustments arising due to those accounting policies, he may ask the management to bring that in the Form 3CD, and that's it. But to say that he will re-audit the financial statements will not be appropriate. Okay? All of you clear on this? Yeah, all of you clear on this? Yeah. Okay, so then we can take up, I think, one more question and then we'll move on to our remaining clauses. We can pick up one more question. So let me just see some of the clauses we have covered. Okay, so let's take the case of another company. Say it is S Limited. S Limited has got one PPE amounting to rupees 2 lakhs. Okay, their gross block is rupees 20 crore. Their gross block is rupees 20 crore. Their inventory average balance of the inventory is rupees 10 crore. So this is how numbers in the financial statements stand. These have been picked up from the financial statements of the entity. Okay. Then this entities So this is one. This entity has got multiple GST registrations. Has got multiple GST registrations. So now let's see what has happened during the year. In Form 3CD, management did not report in respect of, what is this clause? Let me just go to that. Did not report anything under clause number 15. And clause number 15, I am hoping you should remember. Of capital asset into stock in trade. And during the year, what had happened that this item was converted into stock in trade during the year. Management did not report this because they said it's insignificant. So they reported nil over here, and the basis which the management considered was insignificant. So they said unnecessarily some of these adjustments they may have to make in respect of the tax computation. So that's why, to get away with all of those hassles, they decided to keep it as nil. Number two, management had multiple GST registrations, and in their clause which talks about various GST registrations to be mentioned, that clause is number 4. In the clause 4, 3 GST registrations were missed. 3 GST registrations were missed. Okay. Now, when the tax auditor came, he had observations on both of these clauses. First, his first observation was that this cannot remain nil. This should be reported. Even if the amount is insignificant, number should be reported by the management. That's his first observation. So clause 15 should be rupees 2 lakhs. This is one. But the management is not agreeing. Management is saying, no, we don't want, will not report. Number 2, during the course of his audit, tax auditor found that 3 GST registrations were missed, which he discussed with the management, and the management updated this clause. Clause number 4 was updated by the management. Updated means all the missing GST registrations were included. So maybe management missed out while putting down all of this information in the Form 3CD, but later on they put that. Okay. Now in this case, auditor is done with the audit, and final stand taken by the management is clause 15 will go out as nil. This is the final conclusion, and clause 4 stands updated. For all other clauses, we are not having any discussions right now. Now the auditor wants to take a position, but let's see what can be the positions which can be taken by the auditor. 1, auditor should report regarding both the matters. 1 and 2. Auditor should report regarding both the matters. Matter number 1, that 2 lakh is missing. Matter number 2, that 3 GST registrations were missing, which were updated in the utility after the audit by the tax audit. Okay. B option, report regarding this observation 1. Means he should not report anything regarding this clause number 4 because this has been updated in the form 3CD. So that's why there's nothing to report around this. Third, report regarding observation number 2, because if you look at 2 lakhs, this can be considered to be insignificant by the auditor, but in case 3 GST registrations are missed, this can be a very significant thing, because these 3 registrations may be covering a significant part of the sales or purchases, the operations of the entity. So that's why it's a very, very important matter which must be reported by the auditor. Okay. Fourth is auditor should give a clean report. Auditor should give a clean report. Yeah. So these are the 4 options which seem to be available to this auditor, and we need to decide out of these options which one will be considered to be the best one in respect of this auditor. Okay. So let's analyze all of these options one by one. First option, he should report regarding both the matters. Now, when he will report regarding both the matters, there seems to be a problem around this observation number 2. When you look at observation number 2, this was definitely pointed out by the auditor. But the final form number 3CD is now corrected, is now updated with the missing information. So to say that the form 3CD or the particulars of form 3CD are not true and correct, will that be the right stand by the auditor? The answer is no. So that's why this option is not possible, because it requires auditor to comment on clause number 4, and that's why option number C also goes away. So both these options are removed. I can see the response from Hilda. Hilda is saying observation regarding both should be included. I'm hoping that you must have understood as to what should be the final, why option number A should not come. Then Ambika has also given the answer. Ambika is saying we should go with observation point number B. Let's see. Then I think we can also look at this point number B now. Point number B says report in respect of clause number 15, which says that 2 lakh is something which is reportable, and to say whether that is significant or insignificant will not be really relevant in the context of the audit, which is correct. So that's why B seems to be the right option, but we have another option to be evaluated, and we never know that it may be a better option. Maybe there are 2 options wherein both of them can be right, but one of them can be the better option out of them. So let's understand. 4th option talks about the clean report. Clean report means nothing should be reported on clause number 2, which is absolutely fine. But when we make a statement that nothing should be reported for clause number 15, that doesn't seem to be all right. So that's why option number D also goes away. So what are we left with? Even though we have analyzed, we are anyways left with option number B. Okay. All of you clear on this? All of you clear on the requirements of the tax audit and clear on some of the way or the way some of these MCQs may be drafted? Yeah, so we can now move on to the remaining clauses, and after some time we'll again come back to some more questions. In the morning, we did not discuss clause number 18. Okay, so let's move on to this clause number 18 now. Particulars of depreciation allowable as per the Income Tax Act in respect of each asset or block of assets in the following form. So the particulars are required to be furnished in the following manner. First of all, description of the assets, block of the assets. Description will cover block of the assets because that's the concept that we have under Income Tax Act, unlike what we see in case of Companies Act. The rate of depreciation, actual cost or written down value as the case may be, additions, deductions during the year with dates. In the case of any addition of an asset, date of put to use, including adjustments on account of SENVAT credit. SENVAT is all about the input credit. Change in the rate of exchange of currency, any adjustments due to this forex. Subsidy or grant or reimbursement means if there are any adjustments due to any of these grants in respect of fixed assets. Depreciation allowable, written down value at the end of the year. Okay, yeah. So all of these things are required to be reported as per clause number 18. Now, in case of most of the organizations, like manufacturing companies, FMCG companies, say the companies which are into trading also, or some of the companies, say in automotive sector. So if you look at the large size companies, they will generally have a huge gross block. And when we talk about medium sized companies or large size companies, they will generally have a huge gross block, wherein maintenance of all of these records, which are required by this clause number 18, is considered to be a challenge in itself. So if you look at the annexure or the attachment, which will go as per the requirements of clause number 18, at times it may be running into hundreds of pages because there could be so many items. There could be so many items which may be included in the fixed assets. And this disclosure is all about the fixed assets, or which we now call as property, plant and equipment. And other than this, these are also required to be audited in a different manner, because something that the auditor would have audited in the case of financial statements will not fully help to audit this clause number 18. Let's understand what can be the differences over here in terms of what the auditor would have audited in the case of financial statements and what are the requirements in the case of form number 3CD. First, and I think a very common difference, is about rates of depreciation. So if the rates of depreciation are changed, what will happen? Entire computation of depreciation will have to be changed. This will lead to recomputation of depreciation by the auditor afresh. So we are not saying whatever was recomputed or whatever was computed under the Companies Act in case of financial statements. No, we are talking about a different working of depreciation which would be prepared as per the provisions of Income Tax Act. Covering these rates of depreciation will have to be computed by the management, which will then be recomputed, or on which audit procedures will have to be performed. So this is one. Number two is about the concept of gross block. Or about the concept of block. Under income tax, the block concept is followed. Means all the assets under a particular category are put down in a block. Unlike what we do in case of financial statements. And in this case, this entire block is considered to be the one on which depreciation will be charged, or on one from which deletions etc. will happen. This again will lead to a different computation of the opening balances as well as the closing balances. So this will lead to differences in balances of PPE. Number 3, some of the adjustments which are required to be considered over here, like adjustments related to forex, adjustments related to grant etc. You will not see those adjustments in case of audited financial statements as per the Companies Act. So this is another area which will require an audit afresh by the tax auditor. Okay. Number 4, under income tax, over and above the different rates of depreciation, the way depreciation is computed or the way depreciation is charged is not something which goes on a proportionate basis, which we do in case of financial statements. Let's suppose if an asset is purchased on 1st of May 2019 during the financial year 1920, the depreciation will be charged from 1st of May. Yeah. But under income tax, what do we do? Under income tax, depreciation will be charged by breaking all of these assets into 2 categories. Means all the additions into 2 categories. One, which are less than 180 days. Second, which are more than 180 days in terms of their acquisition date. And that's why this depreciation will again have to be recomputed. This will again be requiring the computation by the tax auditor. Yeah. So can you see, first of all, the block of fixed assets is significant in case of most of the companies, and when for that block different computation will be required to be done, then it will become a very difficult exercise for the management to keep a track on these 2 types of statements or these 2 types of records which will be maintained in the financial statements or for the financial statements, and the one which will be required for the tax audit purposes or for the purposes of Form 3CD. Yeah. And of course, the audit effort will definitely be very high. Okay. So let's now move on to the annexure, the appendix, to understand as to how these items would have been reported. We can go to this attachment now and see how these items were reported. So these are the particulars of the assets. Now for this entity, you will see particulars are very few because it was a small entity and the assets were also not very significant. But for an entity for which assets are significant, this can be very difficult to manage. Okay. Now in this case, if you look at the additions column, some of the procedures other than what we have just discussed, if you look at the additions column, one procedure that the auditor will be required to do will be to check whether the additions which have been reported under Form 3CD, match with the additions which have been reported in the audited financial statements. So that's a check, because even though additions are broken into more than 180 days or less than 180 days, additions should remain same. So this is a kind of check which auditor needs to always do. When we look at the sales proceeds, this cannot be matched because in this case, we are not looking at the deletions or the amount which is deleted in terms of the cost. It's about the sale proceeds. This amount will not really match. For depreciation, we have already discussed that procedures will have to be performed as around the opening balance. So this WDV that you see on 1st of April 2018. How do we match this? How do we check this? This is generally traced to the last year's audited Form 3CD. So the closing balances which were reported in the Form 3CD last year should move to opening balances of the 3CD in the current year. So that is also a way to check whether we are really moving with the same numbers which were reported in the last year as the opening balances or not. Okay, yeah. Then we move on to the closing balance. Now closing balance will involve what? Closing balance will involve all of these arithmetical computation. All of these arithmetical computation. So again, this is also very important because we cannot just rely that whatever numbers would have been put over here, they will always be all right. So we should look at the computations as to how all of these closing balances would have been derived. So currently you don't see any formula over here, but generally there will be a formula which would have to be applied by the management. In case those they have not applied, then the auditor should also recompute and ensure that the particulars which have been given in this annexure or in this appendix or attachment are arithmetically correct over and above these procedures that would have been covered by the auditor. Okay, all of you clear on this? Other than this, there is another procedure which the auditor would require to perform and which would have been reported by the management. This is about details of additions to the fixed assets during the period or during the year. Now think of a company which will be having a huge gross block and wherein additions to the fixed assets are multiple. Therein, this clause will run into many pages. 30 pages, 40 pages, 50 pages are very commonly seen in respect of this type of disclosure. And now a question may arise that let's suppose, sir, if there have been so many additions during the year for which we have already checked whether those additions, means total additions, are matching with the total additions as per the financial statements. So will the auditor be required to perform any other procedures in respect of the additions? Yeah, so that is one of the questions which may come to your mind. So just give me 1 second. I just need to mark few points on. So just give me 1 second. Yeah, so we were discussing about the procedures which the auditor may be required to perform over and above ensuring the completeness of this procedure. Just 1 minute. Yes or no? Yeah. So in this case, auditor would have ensured that the additions during the year as per the audited financial statements are 2,55,418. So I've added these two figures, 22,000 and 2,33,000. By doing this, completeness of the additions is ensured in form number 3CD. Yeah, and all of these additions can also be tested category wise, though some of the categories which are required to be considered under Income Tax Act may be different from the categories which are there under the Companies Act or the financial statements. By categories, I mean to say these categories. And some of these categories could be different, but still on an overall basis, we have ensured that the total additions are matching. And if you look at the additions which have been reported in this second attachment, there again, additions are matching with the total number which is reported in this attachment number 4. Yeah, yes or no? Now, in case this has already been done, and we have been discussing that the most challenging area for an auditor happens to be completeness testing, which is also fulfilled. So what do you think can be an additional procedure required to be performed by an auditor in respect of fixed assets, or specifically if I have to say in respect of additions of fixed assets? Let's think about that. What can be those additional procedures? If I have to think about those additional procedures, some of the procedures which come to my mind is first about checking whether all of these additions are going under the right head or not. Because the categories under income tax and the categories under the Companies Act or the financial statements are different or could be different. Yeah. So the classification problem may arise, which will have to be checked by the auditor. Number one. Number two, this segregation of additions. This is again a big problem. This segregation of additions is again a big problem. Do you see this in case of financial statements? No. But in this case, in Form 3CD, this segregation is required. And this segregation may not be very easy to do. This may be a complex process at times, because to apply the formula on all of the line items, and for some of the line items, additions details may not be fully available, some of the details may not be proper, and some of the details may not be very, very significant, for which some of the records may be missing. So that's why to put that down in the form of Form 3CD will be again an exercise in case the management doesn't have the proper records, and will be a bigger exercise for the auditor to audit that in case the management doesn't have the proper records, because all of them will have to be put down in the right shape. And last but not the least, which the auditor must do, is about testing some of these additions. So all of these additions which have been put down over here, auditor should also test check whether those additions are meeting the criteria of fixed asset or not. And one may raise a question, that's a testing of all of these additions, or testing of additions would have already been performed by the statutory auditor, wherein he might have not checked each and every addition, but still he would have selected samples. And if you look at the sampling procedure, it is representative of the population, through which auditor was fine, statutory auditor was fine. So what is the need to duplicate this? In case of tax audit, this procedure should still be applied, because by looking at the additions on a sample basis, auditor can verify various things. One is about their existence, second is about their correctness, third is about their classifications, which could be different, and fourth is about the depreciation and their segregation under less than 180 and more than 180 days. Okay, yeah, clear on this? Then after the additions, details of deletions to the fixed assets are also required to be furnished. And where can these particulars be picked from? These can also be picked from the fixed asset schedule of the financial statements, PPE schedule, because PPE schedule will contain all the details of deletions, which should be flowing over here. which should be flowing over here, on which all of these amounts can be easily checked. And some of these items, so in this case you only see one item, but it will not be only a single item, there can be multiple items over here. So these should also be checked by the auditor on a sample basis. So this can be another very important procedure on the part of the auditor. Yeah, clear on this? Clear on this entire clause? So most of you who might have worked on tax audit, they must be knowing that this clause happens to be one of the clauses which takes substantial time of the auditor in respect of testing procedures, and it also takes substantial time of the management to fill the utility. So that's why another problem these days, since utility has come into the picture, means since the data is required to be filled online, many a times what may happen is management has put in wrong data in the utility, because utilities are required to be filled manually. So they may fill the data inaccurately, which is again not intentional. It's a manual intervention, manual exercise. So errors may come over there. This is again something which the auditor will be required to check. Okay, clear? Can now move on to the next para about 21. So just give me 1 minute. Once again, please. Yeah, so we'll now move on to clause number 21. This talks about furnishing the details of the amounts debited to P&L. Means the amounts which have been debited to P&L, means all of the details should be picked up from P&L only. So we know the source now, because that is what this clause specifically requires, that these should have been debited to P&L. In case these are not debited to P&L, then we are not required to get onto those details. And it says if those have been debited to P&L and those were in the nature of capital, personal, or advertisement expenditure. So let's see how would the management have reported this. All of these items would be reported by the management over here. Any capital expenditure, in case the management would have had. Personal expenditure, which should not have been debited to P&L, in case that has been debited over here, those will be required to be reported. In this case, it's all nil. That's why we will not really be having something from the attachment or this attachment number 6. Now, how do we trace all of these amounts as an auditor? Objective of the auditor is to now look at the P&L, scrutinize the P&L and pick up all of these amounts from the P&L. From the P&L, some of the heads which may help the auditor could be about repairs and maintenance. For example, it may have happened that certain items which should have been capitalized as PPE were charged off by the management by straight away taking them to P&L. It may be intentional, unintentional. We are not worried about it. We are just required to report all of those cases. It may have happened that directors of the company, owners of the company are booking their personal expenses in the P&L of the company, which is wrong. Which should not have been done. All of their personal expenses should be kept out of the P&L of the company. But in case that has been done, what do you say? That is again considered to be inappropriate, which is required to be reported. And you will not say this is inappropriate. You will just report all of those cases or all of those amounts. Third, if there is any advertisement expenditure, that is again required to be reported. Then comes another clause which talks about amounts inadmissible under section 40 subclause 40A as payment to non-resident, details of payment on which tax is not deducted. What tax is this? TDS. Date of payment, amount of payment, nature of payment, name and address of the payee. Payee means the person to whom payment is made. B, it talks about details of payment on which tax has been deducted but tax has not been paid. So in the first case, we are seeing details of payment on which tax is not deducted at all. Second case, wherein the tax has been deducted but that has not been paid during the previous year or in the subsequent year before the expiry of time prescribed under the section 200. And there again we need to specify the date of payment to that party or to that person, nature of the payment, amount of the payment, name and address of the payee, amount of tax deducted. Now in this case you can see one more clause has been added, amount of tax deducted, and you will see this is missing under B. Sorry, this is missing under A, and I am hoping you will understand why. Because under A, tax has not been deducted at all, but under B, tax has been deducted but not deposited. Yeah, so this is also required to be considered. Then the details as payment, then comes the next clause which talks about as payments referred to in subclause IA. Therein again we are required to report couple of things: details of payment on which tax is not deducted, details of payment on which tax is deducted but has not been paid or deposited before the due date. Then under subclause IC, IC, IIA, IIB, III, I4 and 5th. Next, disallowance or deemed income under section 40A subsection 3. In this case, auditor is required to examine the books of accounts and other relevant documents to check whether any expenditure covered under section 48 subsection 3 read with rule 6DD were made by account pay check drawn on a bank or account pay bank draft. If that is done, then it's all right. If not, then the auditor is required to, then the details are required to be furnished over here. Yeah. And let's read the B point along with this. Then we'll discuss both of them together. On the basis of books of accounts, on the basis of examination of books of accounts and other relevant documents oblique the evidence, whether the payment referred to in 40A 3A read with rule 6DDE were made by account pay check or a bank or account pay draft. If not, furnish the details of amount deemed to be profits and gains of the business and profession under this section 40A subsection 3A. Now in this case, what is it that the auditor will be required to obtain? Now looking at the requirements of this section, auditor will first of all be required to carefully scrutinize the cash book of the company. See, generally in today's time, most of the companies do not maintain a cash book if they are large size or medium sized. That's why for most of the companies which are decently sized, you will not see any particular to be reported over here. Why? Because they may not have any cash book. They may not be maintaining any cash with them. But in many of the companies, you may see some cash balance being maintained, which may be required for their running activities, for day-to-day activities. Maybe something is required to be spent for printing and stationery, something is required to be spent for staff welfare, something is required for refreshment, yeah, or something is required for certain reimbursements. Yeah. Now for such types of entities, careful scrutiny of cash book is mandatory. And in the cash book, entries which are exceeding the prescribed limit, say for example, it's exceeding the tax 10,000 amount, that should be carefully done by the auditor. Now let me give you one example. Let me give you one example around it, because all of you know about this provision. So let me just give you one example, and you can just then think whether any of those clauses should be reported over here or not. So let's say in the cash ledger, there are 3 entries. One is of 50,000, second is of 20,000, let's suppose third is of 15,000. Okay, so these 3 entries have been picked up by the auditor. Yeah. And against all of these entries, there are vouchers. So say this is voucher 1, voucher 2, voucher 3. All right. Now, what is the extent of the testing which the auditor should consider in respect of reporting under this clause, or in respect of his audit procedures under this clause? Should the auditor only scrutinize the ledger which he has done, on the basis of which select certain entries, or maybe select more entries or select more transactions, look at their vouchers, and on the basis of the vouchers get these amounts reported in Form 3CD? Or, so this is one option, or he should further drill down these vouchers. Means this voucher may contain various expenses to various parties. Maybe there are various expenses of 5,000, 6,000, 7,000. All of these amounts are below 10,000, for which one single voucher has been prepared. And same is the case over here also. So multiple bills of different parties are there. So in a single day, various cash payments would have been made, but those cash payments have not been made to a single party in the excess of a prescribed limit. But how will the auditor get to know about it? Only when he will further drill down these vouchers. He will get into the details of the supporting documents. Because what is a voucher? Voucher is nothing but an accounting entry put down on the piece of a paper, or put down in the form of any accounting entry which would have been passed in the accounting package. So if the auditor would just limit himself to checking of these vouchers and not going beyond that, then he may be missing out something which is required to be reported, or something which is not required to be reported under this clause. Okay. So out of these two options, which one will you consider as an auditor? Of course, B, wherein you will further drill down all of these vouchers to understand whether there is anything which is reportable under this section or under this clause or not in the Form 3CD. Okay. On this TDS part, I'll come to later. So if you remember, we have discussed about the TDS part also. but we have not discussed that in more detail. I'll come to that slightly later. So let's move on to some more provisions, the small provisions. Management will be required to report the provision for payment of gratuity. This is something which is the provision for gratuity they would have done, and this would be reflecting in the financial statements, in the books of accounts. This will be straight away picked from the books of accounts, because the books of accounts are audited, so you can just trace them. He need not get into its computation once again. Yeah. Particulars of any liability of contingent nature, amounts of deduction inadmissible in terms of section number 14A, or any sum paid by the assessee as an employer not allowable under section 40A subsection 9. So all of these things will again require the scrutiny of the books of accounts by the auditor, and in terms of the books of accounts he will be looking at the P&L, because all of these requirements, you need not forget that auditor is required to consider in the context of P&L. Then moving on to the next part, and that is about amount of interest inadmissible under section 23 of MSMED Act. Under the MSMED Act, we understand that when interest is required to be provided, even if it's not paid, this is still required to be provided and disclosed in the financial statements. In fact, if you look at the presentation, this will be appearing in the balance sheet also separately. Yeah. So if you look at the Schedule 3 financial statements, separate presentation is required in terms of the payables to micro and small enterprises. Yeah. Now the interest on that would have been disclosed by the management in the financial statements. In case it's not done, it will again be required by the auditor to check some of these parties, or to check the mechanism of the management to identify as to which all parties will fall under micro, small and medium enterprises, and which all party will be reportable over there, and on which interest should have been computed. So at times it may have happened that in the financial statements this interest has not been provided, maybe on materiality ground, or maybe this disclosure got missed. So does it mean that the auditor will not capture this particular, in case this is missed in the financial statements? What do you think? In case this disclosure is missed in the financial statements, can we have this inconsistency by reporting this amount in Form 3CD? What is your view? The answer is that even if it leads to an inconsistency, it's fine, because if a mistake has been made in the financial statements, that doesn't mean that the same mistake should be repeated by the management in Form number 3CD. So this type of inconsistency is acceptable. There is no problem at all. Okay? Yeah. Moving on to the next laws, number 23. Particulars of payments made to persons specified under section 40A 2B. Now this is talking about the specified persons. Now who are the specified persons? In very simple terms, if we have to relate these specified terms, these specified persons, then we need to refer to the related parties. Similar to what the accounting standards require, income tax also has a provision about the specified persons, many of whom will also match with the criteria of related parties, what we see in case of accounting standards or what we see in case of Companies Act. But it's not necessary that each and every of such party, each and every such party which is reported in the financial statements or which is reportable as per the Companies Act or the accounting standards will also get covered here. This will have to be analyzed, but for sure, for reporting under this clause, auditor should also look at the related parties and should analyze that such related parties will get covered as the specified persons under the Income Tax Act or not. In case they will get covered, then this type of disclosure will be required to become name of the specified person, PAN number, relationship means whether it's a holding company, it's a subsidiary company, or it's ultimate holding company, or it's a director of the company, whatever it is. Then the transaction with that specified person is required to be explained, means the description, the nature of that transaction should be given. So it may be about import, it may be about export, it may be about rendering of services, it may be about remuneration like you see on the screen right now. So this transaction could be of any type. So it doesn't restrict the transaction type to be of certain specified categories and then to report. No, it's only talks about the payments which are made to the person specified under this section of the Income Tax Act. And of course, then the amount will also have to be reported over here. The amounts which have been made to persons which are specified. Okay. Now, in relation to this, one of the biggest problem which the auditor would face is about the completeness. If you remember, in case of audit of financial statements of a company, we discussed the same point, that identification of related parties or to ensure that all the related parties have been covered. I'm not talking about the related party transactions. I'm talking about the related parties. To ensure that all of the related parties have been captured is considered to be a very difficult exercise, for which various procedures can be performed by the auditor. It's also not something which is impossible, but yes, this will also require management representation for sure. Because even if the auditor will analyze the organization structure, even if the auditor will go through various details around the various relationships which may be there in the organization structure of the company, still there could be certain entities which may be required to be reported under this clause and which are not considered by the management and which may never come to the knowledge of the auditor. Yeah, but in case certain transactions have been done, with such party, therein it may be easier for the auditor to track it. So to that extent, because these are the parties with whom payments have been made, so that's why it will still be controllable in terms of ensuring the completeness. But in relation to financial statements, if you compare, this can be a bigger difficulty. And in this case, auditor should also look at the system of the organization, the process of the organization through which they have been identifying as to which all parties are related or unrelated, means specified or unspecified in the context of the clause that we have been discussing. Okay, all of you clear on this? Yeah. Let's move further. Then comes the requirement in relation to amounts to be reported which have been deemed to be profits and gains under section 32AC, 32AB, 32ABA or 32AC, which is all about maintenance of some specialized types of reserves and special types of accounts in the context of these sections, for which again the underlying records will have to be verified by the auditor. Then comes the amount of profit which is chargeable to tax under section 41 and its computation. Now for this section, for this type of computation, auditor will also need to look at some of the transactions. Auditor will also need to look at some of the transactions in relation to the past records. Because on the basis of the past records, on the basis of some of these transactions which would have been reversed during the year and which would have resulted in income during the year, auditor will get to know whether they would really fall under section number 41 or not, which will again require a careful scrutiny of the books of accounts in terms of the other income which may have been recorded, or in terms of certain credits which may have been made to the expenses, because some of these types of income may be reflected under the expenses in the credit side. Yeah, because some of the reversals which might have taken place could have been adjusted by the entity against the expenses of the current year. So that's why that assessment needs to be done by the auditor, and then the auditor needs to get into the details of all of those credits which have appeared in the current year, whether they would fall under the requirements of section number 41 or not. Okay. Moving on to next procedure, next clause, and that is about section number 43B, as it is popularly known as section number 43B. And I think before I get on to this, okay, so yeah, let's move on to section number 43B. Another very important clause of Form 3CD, and at times very confusing clause of Form 3CD. And I'll tell you why this is confusing. In most of the cases, I have seen that whenever this clause or the two sub clauses which are required to be considered over here are filled, there are corrections. So if you look at 26A and 26B, yeah, so these two are required to be reported separately, and generally the entity will report these two amounts under two different annexures, which we are calling as attachment number 8 and 9. And generally you will find that there are corrections, or I should say that generally I have found corrections as the tax auditor of most of the entities, be it large, small. In most of the cases, this is something which has been observed, and that's why I'm calling this clause or the reporting under this clause to be slightly confusing, and that is what is important for us to understand now. So for this, I'll take you to this attachment now. So attachment number first. So let's read this requirement carefully, because only then you will get to know what can be the point of confusion. It says details of sums referred to in clauses A, B, C, D, E, F, G of section 43B, the liability for which the liability which pre-existed on the first day of the previous year, but was not allowed in the assessment of any preceding year, and was paid or not paid during the previous year. So what does it mean? If I have to put this down on the board, so it will be something like this. It says liability which pre-existed on the first day of the previous year. So this is 2019-20, and this is 1st April 2019. I'm just discussing this point with you because this happens to be the most tricky part in respect of these two clauses. This is 1st April 2019, and I'll just make the screen full also. Please wait for some time because I need to look at this clause time and again to put down all of these facts. The liability which pre-existed on the first day of the previous year. First day of the previous year is 1st April 19, but was not allowed in the assessment of any preceding previous year. So this was not allowed in the preceding year and was not paid or paid during the previous year. So this liability existed on this day. Where did it come from? Preceding year. And this amount may get paid or not paid during this year. So if we end the year over here, let's suppose this is 1st October 2020. Yeah. And this liability, let's suppose, was 1000. So they are saying either some of this amount may have been paid. So let's suppose out of this 1000, 100 was paid over here, and say 200 was paid somewhere over here. Okay. Yeah. So this amount is required to be reported over here. Now I will take you to next clause and we'll get on to the particulars slightly later. So it says liabilities incurred in the previous year. Now in the second clause, which all liabilities are required to be reported? Not the liabilities which existed in the preceding year, no, but the liabilities which were incurred during the previous year, means during the financial year. Only those liabilities will be covered over here. So the opening balances all will come over here, and the current year transactions resulting into these type of clauses, resulting into these type of transactions to be reported under these clauses will come over here. Then it says amount incurred during the previous year but remaining outstanding as on the last day of the previous year. So they are saying incurred during this year. So let's suppose 200 was incurred as an expense and this is outstanding over here. This is 200, this is outstanding over here. Yeah. Amount paid or set off before the due date of filing return or date up to which reported in tax audit report, whichever is earlier. So it says amount which is unpaid on the due date of the filing of return is computed after subtracting amount paid or set off before due date of filing return or the date upon which reported in the tax audit report, whichever is earlier. Now out of this 200, let's suppose 50 is paid up to this date. So this is the amount paid up to the date of filing of return of income. So what is the balance amount? 150. Okay. Then it says whether this amount was passed through P&L or not. Means when this amount was incurred or this transaction happened, whether this related to P&L or not. That is again required to be commented upon. Now what is so confusing in this? Let's try to understand what is the point of confusion. Now these two clauses are interlinked. Why? Because in the first clause, I am just reading this point once again. Liability which pre-existed on the first day of the previous year but was not allowed in the assessment of any preceding previous year and was paid or not paid during the previous year. Now in this case, what is required to be reported? So if we look at clause number B, we'll have to move on to next year. Next year, out of this 200, 50 is already paid. So that's why 150 is the closing balance. So we can say out of this 200, there are two parts, 150 and 50. 150 and 50. 50 out of this 200, which is also appearing on the last day of the previous year. Out of this 200, 50 is already paid and allowed for this previous year itself. That's why this 50 will not move on to the next year, but out of this 200, 150 is outstanding. This has not been allowed for this previous year. So that's why for the next year, 2021, when this form 3CD will be prepared again, this 150 will go to this clause number and this 150 will be reported over here. This 150 will not come in this clause number B. No. Clause B will contain only those amounts, will report only those amounts on which transactions have taken place during the year. Yeah. So what is the procedure now on the part of the auditor? Very, very important procedure. To start on this clause number A, auditor will have to ensure that all the amounts which were appearing in the closing balances in this clause. So let's suppose out of this 1000, 100 was paid here. So what will be the closing balance? 9. Yes or no? But this entire reporting in this clause may go wrong if this assessment is not done properly. Yeah. If this assessment is not done properly, if the opening balances are not ticked properly. So it's all about ticking the opening balances. And we have not looked at any of the transactions during the year. We have just seen as to how these opening balances need to be traced. Those will be traced from last year's Form 3CD. But this is the most common error which you will see in the Form 3CD of the entities. Okay, yeah. Then we'll move on to the further requirements of this form number, of this clause under this form number 3CD. Now, what are the items which will be captured under this? 43B items means items which may have been recorded as an expense or which may have been recorded as an expense in the previous years against which outstanding amounts, liabilities are appearing, but which were disallowed by the income tax department. Why? Because income tax department said that whenever you pay this amount, only then it will be allowed. If you remember, this is also one of the differences between income tax and the books of accounts. So now for checking this, what will the audit do? Auditor will first of all pick up all of these items from the financial statements, because all of these should be the liabilities or the transactions which should be sitting in the financial statements or the books of accounts of the company or the entity. And then he should also check whether these amounts have been paid during the previous year or subsequent to the previous year, but up to the date tax audit report is finalized or up to the date income tax return is furnished in both the clauses. And how will these amounts be traced? For tracing these amounts, just one second. Yes, for tracing these amounts, all of these payments will have to be verified to the bank statements, because only through the bank statements we may get to know whether these amounts have actually been paid during the year or not, or paid up to the time limits which have been specified over here or not. What are the time limits? before the due date, of filing a return, or up to the date reported in tax audit report, whichever is earlier. Okay, yeah, clear on this aspect? I would say a very, very important clause of Form 3CD, and this clause keeps changing. This is considered to be very important by the management also, because this has a direct impact on the tax liability of the company or the entity. You can understand why. See, the entity would want to capture more and more amount in this clause under the payment. So that's why this clause will keep getting updated till that last day when the 3CD would be filed. So management may think that more and more amounts they have been paying, they should take the allowance against that in the current year itself or in the previous year itself. Because otherwise in the next year, they will have to take this allowance, and this will be leading to more tax liability in the current year or in the previous year, which can be avoided by paying more of these amounts. Yeah. So some of the amounts like leave encashment, some of the amounts like payment of bonus, which are generally planned around Diwali, and which also happens to be the period around which income tax return is finalized, or that is filed, or the tax audit report is finalized. So the management will keep some reserve to make all of these payments, and management would want this tax audit at times to be deferred till that date, so that they can claim all of these amounts in their income tax return for the current year itself. Yeah, clear on this? And this becomes very, very important, therefore, that the auditor keeps track of all of these updates which will be happening, because some of these payments may have been made, but those may not have got updated in the form number 3CD. Yeah, but anyways, auditor has to pick up a cutoff date, because after a cutoff date, auditor cannot really move, or auditor cannot really perform his procedures on a continuous basis. All right, yeah. So with this, what we can do now is we can take a break. After the break, we'll continue with our discussion on this form number 3CD. And you may be wondering, sir, what has happened? This form 3CD has not come to an end. We are moving towards the closure of form 3CD, and we will also try to discuss some more examples around this form 3CD. GST audit, or this procedures around the GST audit, will then be covered by us, but that will not take us so much time, and I consider this to be something which will also be wrapped up in some time after our break. Okay. Okay, yeah. Welcome back. So we'll now continue with our discussion on this Form 3CD. Okay, moving on to the next clause, number 27. So under 27, again, we have two clauses. Amount of Senvet availed or utilized during the year, means during the current year, and its treatment in the P&L. Number 2, particulars of income or expenditure of prior period credited or debited to the P&L. Okay. Now in relation to 27A, generally you will see an attachment or an annexure. So that is number 10. So let me just go to number 10 attachment now. We now need to report about the input credits. In terms of the input credits, which all input credits this entity is having, it's about GST. GST will definitely be one of the input credits which will be considered. So its opening balance, which is appearing in the books, credit availed, credit utilized, and hence its closing balance is also required to be reported over here. And in case there are any differences in terms of this input credit, how will the auditor get to know about it? Auditor will also trace all of these input credits from the GST records. That means from the GST portal of the assessee or of this client. And in case there are any differences, that should also be reported the way you see that in the form of a note. Yeah. So how will the auditor audit this? Auditor will look at the books of accounts. Auditor will look at the underlying records. Auditor will also test check them on a sample basis. And of course, in terms of the completeness, he will go to the GST portal. From the GST portal, he will check whether all of these amounts which have been recorded in the books of accounts are appearing there or not. Okay. Yeah. Next is about the prior period item. So if there are any prior period items which would have been impacting the P&L, so those are also required to be reported over here. Now in relation to prior period items, the way to track that will be to go through the financial statements of the company, because prior period items under Indian GAAP are required to be disclosed separately, presented separately. So those can be easily tracked over there. Under Ind AS, those are required to be, those will require restatement of the financial statements, for which disclosures will also be required to be given. So from those disclosures also those can be tracked. Okay. So these are the two ways through which auditor can trace them from the financial statements, but still there could be some insignificant amounts of these prior period items which may not be clearly presented or disclosed in the financial statements, possible. But for the purposes of our tax audit or for the purposes of this Form 3CD, can the auditor ignore all of those items? The answer is no. Auditor will not be able to ignore all of those items. He will have to consider those items. So that's why auditor can also consider scrutinizing the records, particularly the P&L, or some of those transactions wherein he may consider that prior period items may exist. Only through those records he will get to know about these things. And over and above, he will also be having the management discussions, inquiries, and the representations from the management. In fact, representation is something which the auditor will take in respect of all the matters. Similar to what the auditor will do in case of financial statements. Similar to what the auditor will do in case of statutory audit. Auditor will take the management representation letter, wherein the management will represent how all of these clauses have been filled in form number 3CD. Okay, what are the So what are the bases which the management have considered? So that means management would have considered all the requirements of the Income Tax Act or the laws or the rules or the circulars, notices or these ICDS, all of these stuff they will have to specify very clearly in their representation letter. Okay. Then comes the next clause, that is about clause number 28, which talks about certain requirements of consideration. So let's read this clause. It says, whether during the previous year assessee has received any property, being share of a company, not being a company in which public are substantially interested, without consideration or for inadequate consideration, as referred to in section 56 subsection 2. If yes, furnish the details of the same. Now for this, what can the auditor do? Auditor will need to obtain the list of all of these types of properties from the assessee. List of the details of all of these items would be received from the assessee. And then he will check the books of accounts with reference to all of these transactions would have taken place. He will also check about this consideration, whether these have been received without consideration or for inadequate consideration. For the consideration, whether the consideration was involved or not, he can easily trace that from the books of accounts because the payouts etc. would have been done. In case this is inadequate consideration, that is something auditor will have to assess. Auditor will have to assess by getting into the adequate consideration or by evaluating as to what should have been the adequate consideration in respect of this type of transaction or this type of receipt which the entity may have during the current year or the previous year. Okay. Moving on to the next clause. Whether during the previous year assessee has received any consideration for issue of shares which exceeds fair value of shares as referred to in section number 56(2). If yes, please furnish the details of the same. So as against the issue of shares, first of all, how can the auditor track it? He can get into the details of all of these shares issued. Yeah, against all of those shares issued, then the assessee, then the auditor can check by looking at the supporting documents, by looking at the valuation documents, whether these fair market value were in line with the requirements of this provision of the Income Tax Act or not. If those were in line with the provisions of the Income Tax Act, then it is fine. If those were not in line with the provisions of the Income Tax Act, then this can be something which needs to be reported, and some of these items which may have been reported can be easily verified because those items are already appearing. In this case, again, what is the problem? If you look at clause number 28, clause number 29, the problem will more of arise in the case of those items which may not have been reported by the auditor. Which may not have been reported by the management. So trace all of those items and to ensure whether those or all of those items are appearing in the Form 3CD is something which will be required to be ensured by the auditor. Okay. Then we move on to the next point, and that is about clause number 29. Whether any amount is to be included as income chargeable under the head income from other sources as referred to in section 56 subsection. If yes, please furnish the details, nature of income and amount thereof. In this case, there is none. 29B, whether any amount is to be included as income under the head income from other sources under a different clause. So if you see, the difference in these two cases are in respect of these two clauses. Yeah. On the basis of the requirements of these two clauses, the reporting is required to be done. So now let's get on to some of those procedures which are required to be performed in relation to some of these items. So what we can do is we can now look at some of those procedures. So I'll take you to the list of those procedures now. And we'll start with the procedures around this clause number 29 first of all. This provision is applicable where a company has issued shares during the year, correct? This can be checked from the financial statements, share register, MCA records. In this case, check whether the assessee received any consideration for the issue of shares during the previous year. How will he check it? By looking at the records, by looking at the listing of the shares. If yes, all of those should have been noted down by the management. This clause is applicable to companies in which public is not substantially interested. Therefore, the reporting under this clause is to be done only for corporate assessees. Obtain from the auditee a list containing the details of shares, something that we have covered. Then the tax auditor should also obtain a certificate from the assessee regarding any such receipts during the year, either received in his business or profession or recorded in the books of accounts. He should also scrutinize the books of accounts. Why? Because some of the items may have been reported, but some of the items which have not been reported, he will get to know about all of those items only after his scrutiny. In case of other assets, the provision of Rule 11 UA read with 11 U are to be followed for determination of fair market value. Wherever there is a dispute or doubt as to the valuation of the asset, therein the auditor would be advised to request the assessee to obtain the valuation report. In that case, assessee would be required to request to obtain a valuation report from the registered valuer. The report of the tax auditor may then be based on such valuation report, which will again be analyzed by the auditor. It's not that he will not analyze it, but yes, his report will be based on that. Okay. Yeah. Now moving on to this 29A and 29B. You remember there were differences of those clauses 9 and 10 in that. So let's see what are the procedures which the auditor will perform in respect of these two clauses. Obtain a certificate from the assessee regarding all such advances received towards transfer of capital assets which have been forfeited during the year. Examine whether any amount of such advances has been written back during the year and examine the basis of such write back to determine whether such write back was on account of an act of forfeiture. Verify the terms of contract to check the conditions to forfeit such advances, and such conditions have occurred. Then should verify whether such amount has actually been forfeited or not. Okay. Now in respect of 29B, let's see what are the procedures he'll perform. Obtain a certificate regarding any such receipts during the year. Again, he'll obtain a certificate, or you can say he'll obtain a listing or a document which will contain all of those receipts so that he can capture all of those items first of all to start with on his audit procedures. Now in this case, he will check if there is a dispute or doubt as to the valuation of the asset. Therein, he will request the management to obtain valuation report from the registered valuer. Okay. In case assessee has disputed the stamp duty value, in case assessee has disputed the stamp duty value before the stamp authorities, and such dispute is pending as on the date of finalization of audit, then the tax auditor should ensure that such fact has been mentioned So such fact should be mentioned in the Form 3CD. At times you may think, sir, it is saying that the tax auditor should state. So what does it mean? That the tax auditor should report in his report, or tax auditor will write in his report in this Form 3CD? It simply means that he should ensure that this should be mentioned in Form 3CD. He is not required to report. He will be required to report in case this has not been taken care of by the management. Okay, yeah. Now we'll move on to the next clause, clause number 30. Details of any amount. Just give me 1 minute. Details of any amount borrowed on hundi or any amount due thereon, including interest on the amount borrowed, repaid, otherwise than through an account paid check. So in this clause, if there are any amounts which are borrowed on hundi, or if there are any amounts due in respect of that, including the interest, if there is an amount which has been repaid, otherwise than through an account paid check, means otherwise than through an account paid check, only then such reporting will be required. Now, how can this be audited by the auditor? So we can go to some audit procedures around this as well. So let's understand. In respect of all of these borrowings or sort of borrowings, auditor can look at the financial statements, books of accounts, through which he can scrutinize any such transaction. Okay, he can scrutinize any such transaction. He will also need to obtain such list from the management. That is something he'll do everywhere. And most of these items would have been reported by the management already in Form 3CD. But some more details around it in terms of understanding of all of these transactions, auditor may require a detailed listing of these items, which will then be discussed with the management, and on which auditor will then apply his audit procedures by checking the supporting documents, by getting into the underlying documents, like for example, the terms and conditions in respect of that instrument. Okay. Let's also read some of the procedures which may be relevant to this type of clause. Obtain from the assessee particulars of any amount borrowed on hundi or any amount due thereon, including interest on the amount borrowed or repaid, otherwise than by an account paid check. Because if that is by an account paid check, it's not required to be furnished. Details are not required to be put in Form 3CD. Then he will check whether any such repayment or payment has been made otherwise than by an account paid check. This is the most important point. If yes, then list out the amount involved on a transaction to transaction basis, indicating the date of payment and the mode of payment, because mode of payment will now be important to be reported, because it has to be by an account paid check. But if that is not by an account paid check, then the mode of payment as to what was that is required to be furnished in terms of various details, including the date of payment. In this respect, it will not be very easy for the auditor to track all of these transactions in case they have not happened by anything other than an account paid check. That's why management representation becomes very important procedure in this case. So this management representation will have to be obtained by the auditor, that there has not been any repayment of amount borrowed on hundi or payment of interest in respect thereof otherwise than by an account paid check. Because all of these checks would have already been issued and the checks will not be in the possession of the assessee. So if the auditor will be required to check whether those checks were account pay or not, can he do that? Can he check that? No, these are already issued, which would have already been credited, or if not credited from the account, they would be with the parties. Now, whether those are really account pay checks or not, how can the auditor verify it? He cannot verify it till the time he will have that account pay check in his possession. That's why in this case, the most important procedure happens to be the management representation, that these payments were made by account pay check, otherwise reported. Given note suggested by the ICI that it is not possible for the tax auditor to verify that the amounts borrowed on hundi or any amount due thereon, including the interest on the amount borrowed, were repaid otherwise than by an account pay check, as the necessary evidence is not in the possession of the assessee, as we have discussed. Because the check is not with the assessee now. So how can he check it? No, he cannot check it. Yeah. So what are the details that will be required to be furnished? Voucher number, date, name of drawer, amount received, mode of receipt, repayment, which will include date of repayment, amount, means principal and interest separately, mode of repayment, remarks. Okay, and all of these particulars should definitely be traced to the books of accounts, because they should be in line with the numbers which would have been reported in the books of accounts. All right. Yeah. Next, clause number 38. So I'm just not going to that document now. Some of these clauses we can just discuss from this document itself, because we don't have any appendix or attachment in this case. So we can just now look at this clause. What does it say? Whether the primary adjustment to transfer price as referred to in section 92 CE has been made during the previous year. So this appears to be in relation to transfer pricing. Number one. If yes, please furnish the following details. Under which clause of subsection 1 of 92 CE primary adjustment has been made? Number one. Amount of that primary adjustment, whether the excess money available with the associated enterprise is required to be repatriated to India as per the provisions of 92 CE. Yes or no? This is required to be commented on. If yes, whether the excess money has been repatriated within the prescribed time. And again, you need to look at the requirements of 92 CE for understanding of this clause. If no, the amount of imputed interest income on such excess money which has not been repatriated within the prescribed time. Now, this is a clause which has been inserted for reporting requirements of primary adjustments and various other details in respect of section 92 CE, which is about the transfer pricing. Okay. The section requires making of a secondary adjustment in certain cases where primary transfer pricing adjustments have been made. These cases are where transfer pricing adjustment has been made by the taxpayer of his own accord in his return of income, made by the assessing officer and accepted by the taxpayer, determined under an advanced pricing arrangement entered into by the assessee, made as per safe harbor rules framed under 92 CB. And there are various other provisions of this 92 C, which I am not really getting into. So now what is required to be done by us? See, we are the auditors. So that's why we need to get to the audit procedures around it. So let's understand the audit procedures around it. Obtain a certificate from the assessee as to what transfer pricing adjustments have been made during the previous year. so that primary owners should be with the management, and then the same should be verified from the tax records whether there is any such occurrence or not. So it's very simple. First of all, take the details from the management, so that the management would say that they have provided all of these details which the tax auditor has verified. It's not about tax auditor preparing all of those details. Okay. In case any such primary adjustment has taken place which requires repatriation of excess money, tax auditor should verify whether excess money has been received or not. And how will he get to know about that excess money? By looking at the repatriation amount and by looking at the provisions of that section, on the basis of which he will be able to ascertain whether this is excess money or not. Yeah. And the other thing which he needs to check is wherein this excess money has been received, whether that has been received within the prescribed time or not. Yeah. Accordingly, the auditor will report. Next, in case the excess money has not been repatriated within the prescribed time. So the repatriated money has come, the money has been repatriated but not within the prescribed time. In this case, what will the auditor do? The imputed interest income needs to be computed. So the computation of this imputed interest income needs to be done, and this is as per the provisions of this section. Because some of you may be thinking, sir, what are these concepts? Why we are discussing about imputed interest income? Where does this come from? As I told you, for all of these clauses, you need to do the detailed understanding of the Income Tax Act. So some of you who are finding, let's suppose, difficult to understand some of these provisions, as I told you, you need to go back first of all to Income Tax Act, understand all of these provisions, and then come back to the audit procedures around it. Okay? Yeah. Then the auditor should ask the taxpayer to obtain certificates of relevant SBI or LIBOR interest rates and the computation of imputed interest income. He should verify correctness of such calculation of interest on the basis of certificates regarding the SBI LIBOR rates plus the incremental interest as per Rule 10 CB. For interest income imputed, there is some ambiguity with respect to date up to which imputed interest income is to be reported. Now, this is as per the requirements of that section. In such a case, whether the interest income which is imputed till the end of the previous year is to be reported, or whether the interest income imputed up to the date of furnishing of tax audit report is to be reported. Now, since the reporting is for the previous year, it is advisable, advisable for the tax auditor to ensure that the amount of interest imputed till the end of the previous year is furnished. In case the interest up to the date of filing of tax audit report is given, it is advisable for the tax auditor to provide a breakup of the amount of interest imputed till the end of relevant previous year and for the period post the end of relevant previous year, ending with the date of filing the tax audit report. Then we'll move on to next clause, which is about section 94B, which is in the respect of limitation on interest deduction. Whether the assessee has incurred expenditure during the previous year by way of interest or of similar nature exceeding 1 crore as referred to in subsection 1 of section 94B. If yes, please furnish the following details. What are the details which are required to be furnished? Amount of expenditure by way of interest or of similar nature incurred. Amount of expenditure by way of interest or of similar nature incurred. earnings before interest, tax, depreciation and amortization, EBITDA, something which is commonly called as EBITDA during the previous year. Amount of expenditure by way of interest or of similar nature as per 1 above, which exceeds 30% of EBITDA as per 2 above. Okay, so this amount which is computed as per this. So what is 1? This is 1. Sorry, this is 1 and this is EBITDA. So amount of expenditure by way of interest or of similar nature as per 1 above, which exceeds 30% of EBITDA. So that amount is required to be reported or furnished. Details of interest expenditure brought forward as per subsection 4 of section 94B. Assessment year is required to be mentioned along with the amount. Details of interest expenditure carried forward as per subsection 4 of 94B. Assessment year and the amount is required to be specified like this. Okay, yeah. Now this clause 30B requires reporting for purposes of examining allowability of expenditure by way of interest in respect of debt issued by a non-resident associate enterprise under section 94B while computing profits and gains of business or profession, and certain computations around it are required to be done. Now again, what is our role? Our role is that of an auditor. So we'll not get into this taxation requirement. With this understanding of the taxation provision, we'll now start with our audit procedures, because that is important for us to apply the audit procedures in respect of all of these items. The term debt is widely defined to mean any loan, financial instrument, finance lease, financial derivative, or any arrangement that gives rise to interest, discounts, or other finance charges that are deductible in computation of income chargeable under the head profits or gains of business or profession. Okay. The details of carry forward excess interest are to be given in this clause. This figure is to be computed after reducing that brought forward excess interest allowable as the deduction during the year under audit, and after considering the the auditor should verify. So what will the auditor verify? The draft computation of income certified by the management. Yeah. So this computation will be done by whom? Management. What is the role of the auditor? To verify this computation. For the reporting for assessment year 18-19, this figure would consist only of excess interest, if any. Yeah. For example, the third party lender and the associated enterprise of Indian borrower both are non-resident. So reporting under clause 30B in such a case will be applicable. The lender and the associated enterprise of Indian borrower both are Indian residents. So in such a case, reporting under this clause will not be applicable. Yeah. So as regards this 30C, which is in the context of section number 96, wherein the assessee has entered into an impermissible avoidance arrangement. So we are not really getting into too much details around it, because this section in any case, or this clause in any case has been deferred. Yeah, this is not really required to be reported. So that's why I will not spend too much time around this. Now I'll move on to another clause, and I have come back to this Excel sheet because this Excel sheet will give us one attachment, with the help of which it will be easier for us to understand the provisions of this clause and what are the requirements on the part of the auditor. Okay, yeah. So 31A, Under this 31, there are various subclauses: 31A, 31B, 31C, 31BA, BB, yeah. So let's begin with the first one. And for the remaining, you will see the audit procedures are more or less in line with what we will do with the first one. So that's why in case we understand the audit procedures around the first clause or this 31A, then we'll automatically get the clarity around the remaining clauses. Okay. Particulars of each loan or deposit in an amount exceeding the limit specified in section 269 SS taken or accepted during the previous year. So what does this indicate? It indicates loan or deposit which are taken or accepted during the previous year, and they are exceeding the limit or they are exceeding the prescribed limit. So such type of loans or deposits are required to be reported over here. The details of such loans or deposits are required to be furnished over here. Now, what are the details in respect of such loans or deposits which are required to be furnished? Name, address, PAN number of the lender or the depositor, means the party which has given that loan or the party which has given the deposit. Its name, address, PAN number. One. Number two, amount that needs to be given, whether the loan or deposit was squared up during the previous year. Squared up means, say an amount of 50,000 was taken and repaid during the year. That is called as squared up. So even if it is squared up, still it is required to be covered over here. Maximum amount outstanding in the account at any time during the previous year. So let's suppose from one party 10,000 was taken, another 20,000 was taken, another 20,000 was taken. All in all, this was 50,000, out of which 15,000 was paid. So at one point of time, what was the maximum balance from this party? 50,000. So that maximum balance at any point of time during the year in the account is required to be given over here. Whether the loan or deposit was taken or accepted by check or bank draft or use of electronic clearing system to a bank account, means the mode of payment by the lender or the depositor, or the mode of receipt in respect of loan or deposit is required to be mentioned. 6. In case the loan or deposit was taken or accepted by check or bank draft, whether the same was taken or accepted by an account pay check or an account pay bank draft. So continuing on this point number 5th, if we say yes, this came by check and it came by draft, so whether those checks or draft were account pay or not, this is something which is required to be specified. Yeah, so these are the particulars which are required to be furnished in relation to this 31A. And for this 31A, let us first of all go to attachment number 11. Let's see how these are reported over there, because when we see this, we'll get some more clarity. Yeah? First, name is coming, then the address is coming, yeah, then the PAN number is coming, then the amount of loan or deposit is coming, then it is mentioned whether it was squared up during the previous year. If it was squared up, what is the amount? Maximum amount which was outstanding during the previous year is mentioned. Whether the amount was received through check, draft, or electronic system. In this case, all of these were checks. And when these checks were received, whether those were account pay checks, this is again required to be specified. Okay, yeah. So this is the disclosure. This is the disclosure which is required to be given. Now, in respect of this disclosure, let's understand the audit procedures which are required to be performed as to what are going to be the audit procedures. Just give me 1 minute. Now, audit procedures, I'm sure by looking at all of these details, most of the audit procedures would have already come to your mind. You would have already thought as to what can be the audit procedures around it. What is the first step that the auditor will do? In case these are loans taken, deposits taken, so these are liabilities on the part of the assessee. So in the liability schedule, in the borrowing schedule, he will check whether all of these outstanding balances are appearing or not, or he can find out all of these amounts from the liability section. Correct? He will also obtain a list of all of these amounts from the management to start with and trace them to the liabilities in respect of tracing all of these amounts to the books of accounts. Once that step is completed, auditor has ensured the completeness, whether all of these liabilities have been reported over here or not. But there's a challenge which may arise. Let's suppose in the liabilities, 1 crore is outstanding. So auditor will be easily able to put down 1 crore in this schedule or in this appendix or in this attachment. But this clause does not only talk about those balances which are outstanding. Even if there were transactions during the year and which got squared up, those are required to be captured, and that becomes the most challenging part for the auditor in terms of ensuring completeness. For this purpose, auditor will need to track down all of these parties from whom such transactions would have taken place, and he will have to carefully scrutinize their ledger and ensure that in case the transactions were squared up or the amounts were squared up, still they would have been reported by the management over here. Okay, yeah. In respect of the PAN number, in respect of the address or all of these details, how can you verify it? Whenever all of these transactions would have taken place, the entity, the assessee, would have obtained all of these details from the lender or the depositor. So auditor can take all of these details and can verify on a sample basis some of these details from the portals, from some of the records, like PAN number can be verified online also. Address of the lender or depositor can also be verified online. Yeah, even these days go Google, and the Google will easily give you the address of the entities. Correct? Yeah. Now, as regards all of these amounts, because the transactions are many, so a couple of procedures are required to be performed by the auditor. One, on the completeness, he cannot take any shortcut. On the completeness, he will have to perform all the procedures. He will have to trace down all of these amounts from the books of accounts, from the relevant ledgers, and make sure that each and every transaction is covered over here. But in respect of some of these transactions which would have been reported by the management, he needs to again check them on a sample basis. He needs to do a test check whether these amounts which have been reported under this section or under this clause are correct or not, which he can verify again by looking at the ledger, by looking at some of their supporting documents, and ensure that all of these details which are furnished in this clause are correct and complete. All right, clear? Yeah. The last step is about checking as to how these payments would have been received. Now, when he would have received the checks, means the assessee would have received the checks, and that to the account paid checks. It may or may not happen that the assessee would have kept the photocopies of all of these documents. In case it would have kept the photocopies, then it can be verified by the auditor whether those were account paid checks or not. By tracing the details of those checks and the photocopies to the bank statements wherein those checks would have got cleared and the reference of that check number would have been captured. In case all of these account paid checks or the records of these are not available with the assessee, then only the management representation would help. But as regards the check, whether those were received through check or not, it's easy because that can be easily tracked in the bank statement of the assessee. So for this purpose, auditor will need to again check some of these transactions, check some of these amounts, some of these receipts, whether those were received in the bank statements or not through the checks or through the drafts or through the electronic transfer or not. Okay, clear on this? Yeah. So now moving further on to some of the requirements which are related to this clause that we have discussed. Means most of the requirements you will see similar to this. So after 31A comes 31B. So what does it require? It says particulars of each specified sum in an amount exceeding the limit specified in 269 SS taken or accepted during the previous year. So in the first clause, if you'll see, it says particulars of each loan or deposit. Yeah. And now in 31 number B, it says particulars of each specified sum. It says particulars of each specified sum. Yeah. Now what are those specified sums? Those are other than the loan or deposit which have been captured above, for which again similar sort of details are required to be given: name, address, PAN number, amount of specified sum taken or accepted. Because in this case, again, what is going to be the specified amount has to be assessed from the requirements of the section. Whether the specified sum was taken or accepted by check, bank draft or electronic clearing system, and in case it was bank or draft, it was check or draft, whether those were account pay or not. All of these things are same. All of these things are same. Yeah. Now in respect of this, do we really think that some of the other audit procedures, means some of the procedures other than what we have discussed in 31B will have to be performed? No. All the procedures which we have discussed under 31A would also apply under 31B. The only difference is now the parties are different and the nature of amounts are not loan or deposit, these are some other nature. That's it. But whether those amounts have been taken or not, or whether those amounts would have been taken in the form of loan or deposit or something else, all of them will become what for the assessee? Liabilities. So how can the assessee track down all of these things? By looking into the liabilities section. Okay. Moving on to 31BA, which is in relation to section 269 ST. So it says particulars of each receipt. Again, it's a receipt, means the amount taken, in an amount exceeding the limit specified in 269 ST in aggregate from a person in a day, in aggregate from a person in a day, or in respect of a single transaction, or in respect of transactions relating to one event, or occasion from a person during the previous year, where such receipt is otherwise than by a check or bank draft or use of electronic clearing system through a bank account. These are some other types of receipts which are specified under section 269 ST, wherein again, if you will see, most of those details are similar to what we have discussed above. Name, address and PAN number of the payer. Payer means the person who has paid this amount. Nature of the transaction. Now that is important because herein the nature is not clear, something which we knew in case of 269 SS in 31A, 31B. So that's why nature has to be specified. Amount of the receipt, date of the receipt. So these four things are required to be furnished in this case. And how do we verify all of these things? Again, for verification, we can look at the same documentation the same way like we discussed the audit procedures for 31A and 31B. Yeah. But the only problem now is about tracing of all of these amounts. And because these are also receipts, that's why where would these amounts be appearing? Again, the liabilities. So where can we track down all of these amounts? Again, in the liabilities section. Okay. So moving on to the next item, 31BB. Particulars of each receipt in an amount exceeding the limit specified in 269 ST in aggregate from a person in a day, or in respect of a single transaction, or in respect of transactions relating to one event, or occasion from a person, or receipt by check or bank draft, not being an account pay check or not being an account pay bank draft. Yeah. Now in this case, again, what are the particulars which are required to be given? Same particulars are required to be given. Name, address, PAN number, amount of receipt. Okay. Next, moving on to BC. So you can understand now, all of these are so similar. So that's why I'm not getting into audit procedures of all of these clauses separately. Particulars of each payment made in an amount exceeding the limit specified in 269 ST. In aggregate per person in a day, or in respect of single transaction, or in respect of transactions relating to one event, or occasion to a person otherwise than by check or bank draft, or use of electronic clearing system through a bank draft, so through a bank account during the previous year. And here again, all of those particulars are required to be furnished. BD, particulars of each payment made in an amount exceeding the limit specified in section 269 ST in aggregate to a person in a day, or in respect of a single transaction, or in respect of transactions relating to one event or occasion to a person, made by a check or bank draft, not being an account pay check or an account pay bank draft during the previous year. So name, address, PAN number, amount of payment, all of these particulars are required to be furnished again. Then comes 31C. Now this would be different from what we have discussed so far. It says particulars of each repayment of loan or deposit. Now in the previous clauses, everywhere we have discussed about particulars of receipts, amounts taken, loans or deposits taken. Now under 31C, what is it that we are looking at? Particulars of each repayment of loan or deposit or any specified advance in an amount exceeding the limit specified in section 269T. Because you may have a question, but sir, the repayments we were capturing in 269SS also, but this is about a different section. We are now talking about 269T, for which repayments are captured over here only. Okay. Now here again, what are the details which will be required to be furnished? Name, address, PAN number of the payee. So earlier it was the lender or the depositor, you remember? Now it's the payee. Amount of the repayment. So amount paid, or we can say repaid. Actually it's repaid. It's not paid, it's repaid, because it has to be the repayment of loan. Maximum amount outstanding, similar to what we saw in case of 31A. Whether the repayment was made by check, bank draft, or use of electronic clearing system. In case it was check or bank draft, whether those were account pay or not. Okay, yeah. Now in this case, I'm again not going into the attachment, because attachment will not really help us, because we have already looked at the particulars. Let's think about the procedures. Now, what are the procedures which one can perform in relation to this? I would say again, the procedures will remain same mostly, because all of these are loans or deposits taken which are getting repaid. So to track them, again, what do we need to do? We need to get down to those balances, those accounts, those amounts which are appearing in the financial statements or the books of accounts. The only difference is now we are not looking at the amounts taken, now we are looking at the amounts repaid. Yeah, so we are looking at particular set of transactions in the ledger in respect of these types of balances, but furnishing all the similar details like we discussed earlier, and all of these details again will be available with the SSE, which will be required to be audited by the tax auditor. And there again, the number of transactions can be various. Depending on the size of the company, these transactions may be running into hundreds of line items. That's why to check each and every transaction is not possible. Auditor will check them on a sample basis only, but to ensure their completeness is very, very important. Okay, yeah. So moving on to the next clause. 31D, particulars of repayment of loan or deposit or a specified advance in an amount exceeding the limit specified in 269T, received otherwise than by a check, received otherwise than by a check. Now what is the difference? Which was received otherwise than by a check or bank draft or electronic system. Now, in case there were any such receipts, those are required to be reported in respect of their repayments. Next, number E, particulars of repayment of loan or deposit or specified amount or amount exceeding the limit specified in section 269T, received by a check or bank draft, which is not an account pay check or account pay bank draft during the previous year. Yeah. So can you see this? What is it that the tax authorities are trying to capture? They are trying to capture each and every transaction of the entity with all the particulars which they require. First of all, they are saying whether you are doing this through a check or not. If yes, whether it is account pay check or not, whether you are doing a transaction with draft or not, whether that draft was account pay or not. Yeah. So through this, they are trying to track down each and every type of transactions, and in respect of all of those transactions, whether the transactions have been taking place through the bank records or not through the bank records. That's the basis around all of these transactions. And how will the auditor get to know, and how will the auditor track down all of these transactions? Again, by looking at the records of the company. Auditor also needs to scrutinize the bank statements. Auditor needs to test some of these transactions by looking at the bank statements, because in the bank statements all of these repayments will be happening. Okay. Next is about details of brought forward loss or depreciation allowance in the following manner to the extent available. So what are the details of brought forward loss or depreciation allowance? Something which the entity will be having or the assessee will be having. In the following manner to the extent available. Then, whether a change in shareholding of the company has taken place in the previous year. Previous year means reporting year, to which losses incurred prior to previous year cannot be allowed to be carried forward in terms of section 79. Now in this case, why is this section relevant? If you look at this number B, why is this relevant? Because this may have some impact on this amount, which is reported under 32A. Yeah, so all of these may have some linkages, may have some impacts on the amounts. For tracking down the brought forward loss or depreciation, what should the auditor do? First of all, he should check what was this amount which was reported in last year's Form 3CD, and what was this amount which was filed in the last year's income tax return. So those two will be the starting point for the auditor. In that amount, he would make the adjustments, whether those will be additions or reductions in respect of the current year or due to the current year transactions or due to the current year's business. After making all of those adjustments, auditor will get to the number which will be appearing in 32A. But all of these adjustments will not be required to be done by the auditor. The tracing of the last year's financials, last year's income tax return, 3CD will be done by the auditor. But this computation of the current year's number will be done by the management, and the auditor will need to verify that. Auditor will need to check that computation. Auditor will also need to ensure whether this is in line with the provisions of the Income Tax Act or not. Okay. Then, in respect of the change in shareholding which might have taken place during the year, how will the auditor get to know about it? Very simple. He can look at the secretarial records. He can verify all of these changes in the shareholding of the company from the secretarial records. These disclosures, in case these are significant, are also required to be disclosed in the financial statements. So from the financial statements also he'll be able to track down this information. All of these details are also available on some of the online portals. He can also have discussions with the management. And in respect of all of these changes in the shareholding which would have been taking place, and to check whether this has got some relevance in relation to or in relation to section 79, he will have to understand the nature of this transaction. By looking at the nature of the transaction, by looking at the details of the contract in terms of this change in shareholding or the agreement which will give the understanding about the changes in the shareholding, auditor will get to know whether any of such amounts in respect of the losses can be carried forward, can be allowed to be carried forward or not in respect of that transaction. Okay, yeah. So these two are the points in the context of the brought forward loss or depreciation. We are still not done with this Form 3CD, and we are coming closer to the end of our session. And I can understand, that you have had 2 sessions during the day. So I would not really like to stretch this session too much. Otherwise, it will become, very, very exhausting and very, very bulky for all of you. So what we can do is we can just end our discussion over here. But my request to all of you that before we meet next, so we have this session tomorrow evening now, before we meet next, please make sure that you at least flip through these clauses. So I don't expect you to go down and get into the details of these clauses. I'm not expecting you to practice questions on these clauses. No. Only if you flip through all of these clauses before we meet next, it will be helpful for us, because you will have some understanding about some of these clauses with which we can continue, and we can also have discussion on some of the clauses that we have covered by covering certain examples. But that can only become possible if you will be able to remember all of these clauses. All right, yeah. So I'm hoping you will be able to do that when we meet next. And with this, I would just end my discussion over here. Thanks to all of you once again for your time and for your participation. Thanks to all of you. Good night.